Hello there, Maverick Currency traders. This is Rob Reinhold. I'm joined by Ankit Sharma. This is the Currency Room, and we are now into the third week of September. In this session, we're going to be talking about what happened this week. We'll take a look at the broad markets. We'll take a look at commodities, and then we're going to score everything from +3 to -3, and that's going to give us where we're going to focus on our trading this week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
So this week we saw the equities basically recover everything that they lost last week. So we've had now 2 weeks of September. And remember, we've said over and over and over again that September 1st through October 15th is seasonally the worst 6 weeks of the year. I said back in August that I don't think it's going to happen this year, with it being an election year. And you know what? That first week, I looked definitely wrong. Definitely wrong. But here we are. We're basically where we started the month off. You know, down 1 week, up big the other week. We're basically flat here. We'll take a look at the S&P charts. We did see the U.S. bonds weaken. And this is one thing I wanted to talk about. And I really want to challenge all of you. About 2 years ago, we had the yield curve invert. Now, what that means is that the shorter term bonds were paying out more than longer term bonds. So at one point, the 2-year bond was paying out more than the 10-year bond. And whenever that happens, I shouldn't say whenever, but most of the time that happens, it precedes a recession. So 2 years ago, everyone said, oh, the yield curve inverted, we're going to get a recession, especially my perma bears, my negative perma bear traders. They're like, oh, it's yield curve's inverted. Well, guess what? We never got a recession. However, that yield curve stayed inverted for 2 years. Over the last 2 to 3 weeks, the yield curve is now uninverted. So here's my challenge. Do any of you negative perma bears, I used to be one of you, so don't take it too personal. Are you now wildly bullish that the bond yields have uninverted? Are you saying, oh my gosh, this was my signal, I'm now super bullish? My guess is you're not. It's because you have a bias that you can't get over. Your bias is negative. So anything that comes out good is bad. Anything that comes out as bad is bad. I'm challenging you that if you were one of those naysayers that said, oh, yield curve inverted, bad news, you should be elated. Super, super happy about this. All right, I'm going to just move on here, but I really am using this as an example to help you get better as a trader, because understanding how your biases will completely change the data you look at. And that was just a really good example of if you were bearish 2 years ago and it inverted, are you super bullish? I bet you're not. Why? Because it's not about the data. It's about your biases. All right, I'm going to move on here. Cryptos had a nice little gain. We're going to see on the charts, they haven't done anything, haven't gone anywhere. No reason at all to get excited for cryptos at all. Going through the news of the week last week, we had employment come out of the UK, better than expected. We also had GDP come out and miss. So a mixed bag for the UK. And we'll take a look at the pound and how it did. We had 2 reports in the US that were hotter than expected inflation. So the core CPI came out at 0.3, and you can see the core PPI also came out a little hot. What does this mean? Well, the market had been pricing in 3 to 4 rate cuts in the US by the end of this year. What happened was they took some of those back. That's it. They just took one of those back. It's still calling for 3 rate cuts. So we are on tap for a Fed meeting, and I think we're going to get probably that 1/4 point rate cut. But it's not as, again, dire as it was just a week ago. Remember when the markets were falling and everyone was panicking? It's moderated. This is actually quite a bullish thing for the market overall. Ankit, what did you make of those inflation reports?
Hey Rob, good point over there. Well, I must say that this numbers like it should have eased things off, like you said. But then I just jumped on and look at the Fed fund futures and see what the expectation is for the rate cut. You'd be surprised, it's sitting at 50-50 right now. So it seems like the markets are still running with the narrative that next week they're gonna come and do a 50 basis point cut. So I think that I find that interesting here because I would expect the bets for that to kind of back off a little bit here, but that's not the case here. So I think markets has totally ignored some of that little hotter data, and they're just going with the narrative that they might be doing a 50 basis point cut. So I think that's what's really the big sort of story here. Everybody's kind of counting on that big rate cut next week, which again we'll find out what happens.
And I think one of the things we saw last week was the ECB came out and they cut rates by 0.6%. So even more than a half a basis point cut. A lot of times the central banks around the world like to move in conjunction. And I think probably that bigger than expected rate cut out of the ECB. We've now had a couple rate cuts out of the Canadian central bank. I think that is probably helping the market say, hey, we might get a little bit bigger cut than we thought. So let's take a look at the numbers from last week, and then we'll put this week in the bag. And you can see big jump in equities. We had a 4% jump in the S&P, 6% jump in technology, crypto up 7%. Gold had a great week. That is a killer week in gold. And even oil, it's just been plummeting lately. It even found a little bit of a bottom in the high 60s here. Let's focus in on this chart. Now I want to draw in a couple lines here, just so you can see. Here was this big support line at 5,400. And we came down and we met it. And I did the end of day video here, and I said, look, this candle to me is such a clear bullish candle. We went all the way down, retouched that, and then closed at the high. I just said, look, this is bullish, and I thought we were going to make a run up to hit this resistance here at all-time highs. And that's what we did. So we're going to close the week here at all-time highs. The big question is, do we break through now? Or do we still have some backing and filling to do? Is this little area right here, is it going to hold for a while? I don't know the answer to that. Now, what I do know is there's energy. And we've spent a lot of energy over the last 5 days. Typically, when you spend a lot of energy, it's tough to break out of resistance areas. It's just tough. What I think we get more of a base here over the next week. Then I think we get a push out in maybe a week or two. That being said, it could happen, but I'm pretty clear that we are going to get a breakout higher. Ankit, are you as bullish as I am?
Yes, I am. I think I've seen this thing play out over and over. I mean, we are in this election period where there's a lot of money being spent, and I think this is not the time where economy is going to be weak. That's going to be being reflected into the market. So I think it's just a matter of when we're going to break out. I do expect the market do take out and make new highs. And the question is when. We might take a pause here. We might digest the FOMC next week. But eventually, I think we're going to get that breakout. So statistically, from starting September till October 15 is more of that tumultuous period. But right after that, I think it's just going to clear out. And as we go into the elections, I think markets likely to end, much higher than where we are. So I'm on the same page as you, Rob.
Thanks, Ankit. Let's take a look at how the Forex market did. I want to point out this right here. Okay, we have most of the currencies went up or down less than 0.25%. Now look, there was plenty of movement. And so we always talk about trends and we talk about energy here at Maverick. That doesn't mean that there wasn't energy this week. We had lots of moves, but it's pretty clear that by the end of the week, nothing is trending hard. Nothing is just trending hard to where you're like, hey, I need to get on this one and ride it for the next 4 or 5 days. What it's telling you is things are consolidating at the moment here. The one thing we can point out is the yen has continued to stay strong. So if you're looking for something that is trending, I think yen on the long side, despite all the reasons why you could say yen shouldn't be going higher, it still is. So I think you've got to stay long yen. And we'll take a look at the Swiss franc chart. The question is it now starting to trend hard to the downside? I think we're getting really close if we're not there. Everything else, we're going to take a look at the charts. Everything else is consolidating. So this is a much better time in Forex to be shorter term, playing in ranges, buying at the support, selling at the resistance. I don't think it's great trend trading in Forex at the moment. And I mean, this week I only made one trade this whole week, and it was a dollar CAD trade that I think I made 20, 25 pips. That was it. So not a lot of opportunity if you're looking to really catch a trend like I usually try to catch. Let's take a look at crypto. Okay, crypto up across the board. I really want to take a look at the crypto chart here in a second just to see where we are. We took a look at the S&P. Let's take a look at bond yields. And you can see the 10-year US bond yield is definitely looking like it wants to go lower. We have this support area right in here, but remember, this is support. When something bounces off support, this is what you see. This is not a bounce. This is telling you it is likely going to come down and just hang out here before it plunges again. I don't think there's a ton more downside in bonds because I think the economy is going to stay overall strong, but there's no question that the current price action is negative here in the bond markets. All right, here is the crypto basket. This is the 4 cryptos we trade, equally weighted. And you can see for the most part, we were just stuck in this range here. We did break down below this, but we recovered back up. And you can see today's candle basically takes us back into the previous range. We do still have these moving averages falling that are going to create some resistance for them, just like they did right here. I'm still overall slightly bearish on cryptos, which tells me I just am not interested at all in going to try to find something to the long side. So for me, cryptos still have some work to do before they get on my trading radar. Next week, I'm going to jump right to the big one. We've got the FOMC on Wednesday. Now, Forex Factory says 25 basis points. We take a look at the Fed monitor, and it's saying, maybe it could be a 50. I don't think it really matters. I mean, yes, if you're trading the first 5 minutes after the Fed rate, okay, it matters. If you're looking to trade something over the next week or two, I don't think whether we get a quarter point or a half point really matters. And probably the statement, if they cut 25 and then they say next time we're probably going to do 50, again, that's just as good, if not better, as a 50 basis cut now. So I think this is the big news of the week. We also do have the Bank of England coming out, but they are projected to stay pat here. So I really think we're looking at that. Ooh, I forgot. We have Bank of Japan next week. Bank of Japan is likely to be fireworks. Every time we get Bank of Japan now, likely fireworks. They are not expected to do anything, but if they give more guidance to the market that they might raise rates again, that's probably why we're seeing some Japanese yen strength. This meeting, I think, is definitely in play. Remember, there is no time for it. It's tentative. They don't come out at a certain time like other central banks. Typically, I see it between 11 and 1 Eastern time is typically when we see this. And if I had to say when did I see it the most amount of time, it was either right before or after midnight Eastern time. It's typically most of the time, but you don't know when it comes out. If they basically say they're going to hike rates, and remember, when the market freaked out, when the yen trade was unwinding, remember they said, we're not going to raise rates again until the market calms down. Well, guess what? The market has definitely calmed down. We may hear something from them. Other than that, there's a ton of news. I don't want to go through every single piece of it, but take a look at the calendar. Look and see, hey, if I'm trading CAD, I got to know this. If I'm trading Kiwi, I got to know this. Go in and check the calendar. Sorry, I just do not have enough time to go through every single piece here this week. Full of news. I do like this week better than last week, to be honest with you, because the news out there very highly likely to push a lot of things around. So let's go get ready for exactly what currencies we are going to be watching and see what we can trade on. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? As I said earlier, I'm not super interested in crypto. So here we have Bitcoin. It's coming up to its 50-day moving average. Okay, that's nice. That's nice. But if you're a trend trader, there's nothing in this daily chart that says it's ready to go. Now look, if you come down to a 4-hour chart, you can say, hey, that's a really nice movement. I agree. If you're a shorter term trader trading off of a 1-hour or a 4-hour chart, hey, you know what? You've got the velocity. Velocity is a +2 right now on Bitcoin. But what that means is we don't have the daily chart saying it's likely to be a big protracted move. This is likely to be a very short move in Bitcoin. Bitcoin Cash is not showing quite the same strength. Ethereum is just not showing any strength at all. It's worse than the rest, but again, same thing. If you take a look at it on a very short-term basis, we are getting some momentum to the upside. Litecoin has surprisingly been the strongest of the cryptos, and it's actually trying to poke its head out of its 50-day moving average as we speak. We got a velocity score +3. Look, if someone had a gun to my head and said you have to trade crypto, I'd probably trade Litecoin to the long side. Good thing no one has a gun to my head and I can allocate capital elsewhere because I think the Forex market is a much better place to go trading right now. Ankit, will you take us through Forex?
All right, well, let's begin with the US dollar. Again, look at this chart here, and this thing is just slowly lining up. It seems like it wants to break lower, which again goes in line with what's happening, with the rate cut that's expected. So yields are going down, and the dollar is kind of consolidating here. So this is again a chart that I'll be looking at primarily next week. Break below that support. But that's a pretty important support. If you look at the chart on the currency basket, that's a support that's been hanging for quite a few months. So I'm only looking to look for that break below that, but you can see velocities there, trend scores there. So overall, the dollar just looks much weaker. Now, if you take a look at the yen, and this is where we're getting a lot of mixed picture here, because if you look at dollar against the yen, I mean, the dollar looks really weak. I mean, take a look at yen. Yen is almost looks like it wants to break out. It almost got to the highs over there that we had made previously just a month ago, before we had a big wick over there. So this again is running in anticipation. Remember, a lot of times things start to move ahead of the news events, and I think this is one of it. As we're going to next week, we're expecting a rate cut. That's driving the dollar down, and the yields are going down. That's driving the yen up. And again, the expectation that the yen probably be more hawkish. So right now, everything is just looking pretty good for the yen to go higher. Remember, this thing is very volatile right now. I mean, if you really look at the ATR and go back to how it was like 4 months ago, this is very volatile right now. But this is definitely trending to the upside. So next week again, I think we'll probably find out if this is going to have a massive breakout to the upside, or do we get a further wick. But for now, velocity and trend, they're all lining up. Now, the Swiss franc, which again is it's one of those safe haven currencies that we look at right now. Anytime the market pulls back, guess where the money goes. It was before the Swiss franc was the biggest beneficiary. Now it's the yen being the biggest beneficiary, but we do see some gyrations in the Swiss franc. But overall, you can see that Swiss franc has kind of fallen out of that favor a little bit. And right now, it's more about what's happening with the yen. So the trend score is the +1, but overall, if you look at it, it's not the strongest, not the weakest. I would just park it on the side till we know what's happening with the yen. And then again, I think yen is the more one that's more favorable here. Now, if you take a look at the euro, and I had this question so many questions this week. If you look at the chart, you can tell that they cut rates by 65 basis points. So again, euro is not really moving a lot, and that's just a theme that we notice here: euro and pound, they're both going sideways. So I don't really love euro right now until it really break down from that support. And again, all this week had all the reasons for euro to go down, and it didn't. So I think it's kind of a telling here that it maybe doesn't want to go down. Now, if you want to, Rob, take a look at the pound. It looks very similar. I'm not interested in trading pound because take a look at it. It's just sideways. If you look at the charts, there's more bullish and bearish charts right now. So pound is not the one. So I don't really like the pound here. Trend is a -1. Velocity is it's a mixed score. So I don't really love it here. Now, if you go into the CAD, now this is the one that, is looking similar to the US dollar. As you can see that this is also making in a nice basing formation. So we have tested that for support a couple of times. I think eventually it's going to give up that support, which again will coincide probably with the US dollar breaking down. But yeah, this thing also looking pretty weak here. And again, we look at the oil. Oil has been pretty weak, hasn't helped the CAD yet. So overall, I think the CAD goes in the same camp as the USD. Now let's talk about the Aussie and Kiwi. And I know these are the currencies were a bit of confusing ones because if you look at in the big rally that we had in August, you can see that the Australian dollar did rally. But I mean, if you take a look at the big rally in the markets this week, and look what happened with the Aussie. Aussie did sort of stayed weak for the most part. So again, this Aussie and Kiwi, they both are not looking at that good here. If you look back at a month ago, Kiwi was just flying off, and then Aussie was also pretty good. Right now, they both are negative trend score. So, we always talk about how when it should go higher, it doesn't. Maybe, that's a negative sign. And same thing, look at the Kiwi as well. So next week, again, I think is going to be all about what happened with the risk trends, what happened with the dollar. And that's just really going to drive the Aussie and Kiwi higher or lower. But again, looking at right now, at this moment, Aussie is as weak as the USD. So again, it doesn't really help as much if you're trying to pick a trend here. So when things don't make sense, I think you want to just stick to the sideline here and just, like Rob said, there's things that are consolidating right now. So we need to get that big breakout one way or the other to really pick a nice trade. But for now, shorter term trading, especially with the yen, is the only thing that's really working. Back to you, Rob.
Thanks, Anka, and that's a great breakdown. And I'm a big, I love the correlations in Forex. And what I mean by correlations is like, okay, oil going down, be short CAD, S&P breaking out to new highs, go along the Aussie and Kiwi. Those correlations aren't always there. And this is one of those times I want to be long. I want to be Kiwi. That's in my head, that's the playbook. Hey, I think the S&P breaks higher to all-time highs. My first thing I'm thinking is go long Aussie Kiwi. Here's the problem. They look like garbage. What I used to do as a young trader is say, well, they look like garbage now, but the market's wrong. And it's going to be right eventually. So I'm going to buy them now while I get them cheap. Well, I no longer do that anymore because I've learned that they tend to stay cheap. As Ankit said, I don't want to be long in. I have no desire as someone who's read lots and lots of books on, economy and about trading. It's nothing about those books that I've read and information I've gathered says go long yen. But if I just look at the charts, that's the trade. That is the trade. It is short dollar yen, short CAD yen. That's the trade for the week. Now, if we take a look at the currencies as far as the velocity score goes, we're still seeing the same thing. Yen has plenty of velocity to the upside, and and CAD and US dollar have plenty of velocity on the downside. That's the trade. I don't want it to be the trade. I wish it was a different trade. Remember, at Maverick, we have a very famous saying: trade the market in front of you. Not the market you want it to be, not the market you think it should be. This is the market in front of us, so we must trade the market in front of us. So let's take a look at dollar yen and CAD yen on the short side. Before we do that, let's pair up dollar versus CAD and let's make a determination which one of these is weaker. So here's the daily chart. You can see over the last 4 days, they've been about the same. We take a look at a 4-hour chart and we can see there is a slight uptrend in dollar CAD. That tells me that the dollar over the last couple weeks has been stronger than the CAD. So I'm going to go ahead and stick with CAD as the number 1 short of the week, dollar as the number 2 short of the week. So that makes my primary trading target CAD yen short. Let's take a look at it on a daily chart. You can see we are really hitting some pretty big resistance here. We're breaking through some pretty big support here. Yes, we've got this long panic wick. I don't love to use these wicks because this was a panic. That was that Sunday night that we hit 80 on the VIX. I don't think this is more just panic. This wasn't true price action. I'm looking at this as just a really, really nice break of some support that's been there since July of 2023. So for me, I'm ready to go. The daily chart is telling me get short. Now I'm looking for my timing. And we can see that what has been happening, it's been going lower, having bounces, lower, having bounces. Okay, at this point, we are starting to get some bottoming action. We've got some dojis. We've got the long lower shadow is longer. So we're getting at least what says is some bottoming action. Now, what we don't know yet is this going to be a bear rally where we have 3 pretty decent sized candles before we then turn down? Or are we going to get a base? We don't know yet. We have no idea. If we do get a bounce, then I think up to this 104.30 area, 104.20 to 104.50, I think that's going to be the place. I think this stays more of a base than anything. So then I'm looking at base action at the bottom of that base of 103.40. That's telling me 103.40 is going to be an entry point. 103.40 on the downside. And as far as the target goes, we're going to have to go back possibly even to a weekly chart and see, where is the next actual area where we saw some support. And I'm looking down here at 101. So basically 101. If you want to take that last wick, which is 101.50, that's fine with me. But this thing's got plenty of room to go. So for me, CAD yen short, that is the place to be. Ankit, is there anything you want to take a look at?
Hey, Rob. Well, yeah, we can take a look at dollar yen. And I think it's all coming down to these critical levels. And that's where we get big reversals. And that's where we get a lot of gyrations. And again, right now you can see that it's the exact point that we are, where we are at is where there's a big support. And the price action keeps. We get the big reversal that we had, early this week, and then after that it just rolled over. And you can see that this is what's really happening in this currency cross here. So. The question is this going to be, giving us a new leg, new trade? Well, so far you can see that you got to be watching out for this support level. I'd rather see some consolidation or some sort of bounce going into Wednesday. But I think anything before that, I think if you look at it, like the big moves already taken place. Going from 147 down to 146 down to 140 almost. So I think we might consolidate, stay within that range for a couple of days, and then we get that big move on Wednesday. I think that's the trade that I'm looking for. So I'm really trying to be focusing only on things that I have on the schedule. For example, Tuesday we have the CAD CPI. So I'm only looking at CAD crosses on a Tuesday, and then same thing going on a Wednesday, looking at the FOMC. That's just the way I'm looking to unpack this week, as we have a lot of data to come out, and I think that's really where the biggest move's going to be. But outside of that, I don't really want to jump into too many charts because by the time Wednesday hits, charts going to look a lot different. So we'll go through them in the currency recap. But for now, I think we just got to keep in mind where the trend scores are going, and then we'll jump into velocity charts on a Tuesday.
Thanks, Ankit. So remember, 3 central banks. We got FOMC, we got Bank of England, we got Bank of Japan. And then outside of that, we have tons of economic news all around there. This is going to be a good week of trading. I don't say that every week. Some weeks I say I don't think it's going to be a good week. I think this is going to be a good week of trading. So I'm looking to be more active than I was this last week. And as Ankit said, we've got great opportunities Tuesday, Wednesday, and on Thursday. That is the Currency Room. Thanks for joining us. Everyone have a great weekend. Goodbye.